In this presentation, we will take a look at multiple choice questions related to governmental accounting, going through those questions and then practicing test-taking skills with them. First question: when a truck is purchased from the general fund, revenue is received, what account is debited in the general fund? Is it A, none, B, expenditures, C, encumbrances, D, equipment? Let's go through this again using the process of elimination. When a truck purchased from the general fund, revenue is received, the account is debited in the general fund. What account is debited in the general fund? Now, note we've got a truck. We've received the truck at this point in time, and we're talking about the general fund. Normally, when we get a truck, if we bought a truck, we would debit a capital asset expenditures, a capital asset of property, plant, and equipment, or equipment, and it would be on the balance sheet account. But we're in the general fund accounting, in the governmental funds, and those use modified accrual. General fund, the main kind of fund, and it uses a modified accrual. So it might be something funny happening here because the modified accrual usually has current cash flows, and it usually only has like current assets and liabilities, and a truck is a long-term asset, property, plant, and equipment, depreciable type of item. So, given that, is it A, none? Given that, you might think, maybe. And then B is expenditures. So expenditures is like the expense equivalent on the fund, so that seems possible. And then C says encumbrances, and that's going to be like the budgetary account. But at this point in time, when the truck was purchased, we received the truck, so encumbrances would be credited if there's anything done to the encumbrances and not debited, so it's actually not encumbrances. And then D says equipment. That's what we would expect in a for-profit type of organization. So of these three, it's kind of unusual. The modified accrual is going to use the expenditure. So we're actually going to record it as an expenditure. We're not going to capitalize it as an asset in the general fund. Although in the government-wide fund, on an accrual basis, we're going to record this transaction as well. We will be following the accrual basis at that point and recording the equipment on the books as an asset and depreciating it. General fund, modified accrual, no long-term assets, therefore recorded as expenditure, which is kind of like the expense equivalent, increasing with a debit. Next question. Using the modified accrual basis of accounting, revenues are recorded when either A, realizable, B, earned, C, available, or D, received. Let's go through this again using the process of elimination. Using the modified accrual basis of accounting, revenues are recognized when either realizable, so that sounds like a key term, I'll keep that for now. B says earned, that's usually when we recognize revenue under a accrual basis. C says available, and so that's another, sounds reasonable. And then D says when received. And so when revenues are received, you would think that'd be kind of maybe when cash is received. It seems more like a cash basis, so I don't think that's going to be it. Let's go through it again. Using the modified accrual basis of accounting, revenue are recognized when either realizable, earned, or available. Now, because earned is going to be similar to the accrual basis, I don't think it's going to be the exact same. So between realizable and available, the proper answer or the correct answer here is going to be C, final answer, C, available. Next question. Governmental funds operating statement does not include either A, expenditures, B, other financing sources, C, revenues, D, encumbrances. Let's go through this again using the process of elimination. Governmental funds operating statements does not include. So the governmental fund operating statement, the actual statement, doesn't include the and notice we're talking about fund accounting here. So we're talking about the modified accrual basis, fund accounting. We're using expenditures. That seems appropriate because we're using the fund accounting modified accrual, therefore expenditures. B says other financing sources. Seems like that might be on the statements. C says revenues. That's a standard term. We don't modify the term like we do with the expenses to expenditures. So you would think that revenue would be on there. And then D is encumbrances. Between B and D, it's actually going to be D, encumbrances. And that's a little confusing because note that the funds do use the account of encumbrances, but it's a clearing account. So we usually debit encumbrances and credit the balance sheet account of encumbrances outstanding, or the equity balance sheet account, equity, what would be equity type account, assets minus liability accounts of encumbrances. And so we just don't record, even though there might be encumbrances, we don't put those on the financial statements typically, either side of it, either what would be on the income statement encumbrances, kind of like an expense, or the balance sheet item, because it's really a holding account to actually record the expenditures. So we don't record typically the encumbrances on the financial statements, although they might be on, say, like the trial balance or something that has been recorded throughout the time period in the governmental funds because they're on the modified accrual. Next question. Using the consumption method for recording supplies, the adjusting entry made at the end of the year would affect either A, fund balance, non-spendable, and inventory of supplies, B, fund balance restricted and inventory of supplies, C, expenditures and inventory of supplies, or D, fund balance, non-spendable, and expenses. Let's go through this again using the process of elimination. Using the consumption method for recording supplies, the adjusting entry made at year end would affect. Now, when we record supplies normally at the end of the year, you would think of an adjusting entry for profit, where we would count the supplies and record it kind of like a cost of goods sold type transaction. Beginning supplies plus purchases minus ending supplies. That would be the amount we'd use under a periodic type system. And we would typically reduce the supplies oftentimes because it's going to be less with a credit. And we would debit, you would think, expenses. But our goal here is going to be that we want to record the fact that there's part of the net assets minus liabilities is not is restricted. Why is it restricted? Because we got kind of this inventory item on the current, the funds are current resources, current assets, and current liabilities, and we've got this inventory item on there. That means that the net assets minus liabilities, has a related portion to it that's basically already been spent. It's an asset on the books. So we're going to have to do something with the fund balance. So the fund balance then, non-spendable, is a classification of the fund balance saying, hey, we can't spend that portion. And I would expect some type of classification on the fund balance, because that's really what we're trying to do here. We're trying to say, hey, their inventory is on the books as an asset. That means assets minus liabilities, the equity section, part of that amount is represented in terms of an asset, which we can't, you can't spend that money because it's an asset on the books. So we have to say that portion is non-spendable. The other side, inventory of supplies, which you would expect to be adjusted at the end. So A sounds like it could be it. B says fund balance restricted. So again, we got the fund balance with something to it saying we got it restricted in some way, and inventory of supplies. So that seems like somewhat reasonable. C says expenditures and inventory of supplies. This is the one you would most expect related to normal accounting, but it's actually not this one, because we want to fix the fund balance. So you got to keep that in mind when you do this adjustment for the inventory and the governmental. We want to fix the fund balance. So that's actually not it. And then D says fund balance, non-spendable, and expense. So again, you got the fund balance in there and an expense this time. So if you go through these, which one is it going to be? Well, you have two with the fund balance that is non-spendable, which means that that's more likely that it's one of those two and not the restricted one, which is the case. The restricted one does have, that's another way that we can restrict it. But if we already spent the money on supplies, then it's pretty much, it is what it is. It's not just restricted. We can't sell the supplies and then spend the equity. So it's not restricted, it's non-spendable. So it's going to be between A and D. And between the two, it's going to be, the final answer is A, non-spendable, and inventory supplies. We're actually going to adjust the inventory and adjust the fund balance equity type equivalent account for profit to the government non-spendable.